I promise every single one of you that are currently watching this video that dividend paying ETFs and dividend paying stocks are truly the holy grail when it comes to passive income. Now, I can definitely attest to that. Considering right here on my master dividend tracker, you can see that on a yearly basis, I'm estimated to earn around $72,000 per year in dividends, or just over $6,000 every single month. But in this video specifically, we're going to be going through 3 different high yield dividend paying ETFs that offer a significant amount of cash flow on a monthly basis. So if you would consider yourself more of a dividend income focused investor that's looking for cash flow from day one, make sure to drop a like down below, subscribe, and let's get right into the first one. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just a side note before we get into this first ETF, all 3 of these ETFs are currently inside of my long-term portfolio, and I personally, in my opinion, would not consider any of these ETFs as yield traps. Now, that being said, the first high yield dividend ETF that offers a ton of passive income is ticker symbol SVOL, or the Simplified Volatility Premium ETF. Now, I came across this ETF sometime last year and I started buying shares, and this ETF has not let me down ever since. But right here on the Simplify ETF website, it says the Simplified Volatility Premium ETF, or SVOL, seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index, or VIX, short-term futures index, while also seeking to mitigate extreme volatility. So before I show you SVOL's performance and of course the massive dividend that it's paid historically, keep in mind that something like SVOL would be what I would consider sort of an alternative investment and never something that I would build out my entire portfolio on, but use it as a satellite position to generate a ton of income on a monthly basis, and that's exactly what I've been doing. Now, looking at SVOL's performance, and I get it, you're seeing the max chart and you're saying, I thought you said this was not a dividend yield trap. And I promise you that when you see the total return, you're going to believe me. But on the max time frame, SVOL is down a tad, down 11.53%, which is not all that bad, I promise, considering how much this ETF has distributed so far. Now, the expense ratio, this is the elephant in the room, 1.16%. SVOL does have a management intensive strategy, so investors in SVOL are of course going to have to pay for that. 1.16% is not cheap, but definitely could be worth it depending on what this ETF has to offer. Now, as far as SVOL's dividend, I said that it was massive, and it definitely is. 16.23% trailing 12-month dividend yield. And although it's pretty obvious that SVOL or any ETF with a strategy along like this one is not going to pay exactly the same amount or necessarily going to have dividend growth anytime soon, this ETF, at least since inception back in September of 2021, so there is a decent track record at this point. This ETF has paid a pretty consistent dividend of around 30 to 31 cents every single month, more or less, with a few months being a tad bit higher or lower, which definitely hopefully proves what I was explaining a second ago, that SVOL is not a dividend yield trap. Considering on the 1-year time frame, SVOL is up 20.56%, which is beating plenty of stocks and ETFs across the market in that time frame. Now, over the last 3 years, SVOL has returned 35.51%. So of course, because SVOL has decayed a little bit over the last 3 years, you're not going to get the full return from the dividends, but still 35% for a high yield income generating ETF is definitely not all that bad. The next high yield ETF that generates a ton of passive income for me personally and tons of other investors on a monthly basis that I absolutely love is ticker symbol JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. Now, JEPQ is an ETF I'm sure a lot of you guys have heard of, but if you guys haven't, it says JP Morgan's Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. So JEPQ is a lot like any other covered call ETF. It buys into a basket of assets and then along with that writes a covered call overlay to not only protect against downside exposure, but also to generate a ton of premium and then pay a lot of dividends to investors. Now, one of my favorite parts about JEPQ is that even though it is a covered call ETF, it is done pretty well as far as price return goes. And again, relative to other covered call ETFs, this is. On the max time frame, JEPQ is up 6.51%, but on the last year time frame, JEPQ is up 22.04%, which is incredible considering this ETF pays so much in dividends. Now, JEPQ does have a 0.35% expense ratio, which I personally think is very fair considering what this ETF offers and what you're getting exposure to by buying shares of it. Now, on the trailing 12-month, JEPQ is around a 9.34% yield, which, as I showed you a second ago, the price return on top of that, this ETF has performed amazing, at least over the last year or so. Now, just like any other covered call ETF, like we've talked about, JEPQ is not going to pay the same amount on a monthly basis. It depends on volatility, and it depends on how things trade within a monthly basis. But JEPQ has paid a pretty consistent dividend, north of 30 cents all the way to as high as 68 cents back in October of 2022. Now, I promised no yield traps in this video, and once again I kept my word. 35.6% return as far as total return goes when it comes to JEPQ over the 1 year time frame, and we can't really go that much longer because JEPQ has not been around that long. But I think that if JEPQ continues to do what it does, and if the market doesn't go too crazy anytime soon, JEPQ will continue to compound their investors' portfolios for long into the future. Now, the last ETF that I generate a ton of passive income from on a monthly basis is ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now, here on the website it says, why invest in DIVO? Income potential comprised of high quality dividend oriented stocks, and they definitely are, along with covered calls and individual stocks. So DIVO, similar to that of JEPQ, does have a basket of holdings, in this case around 45 different stocks, and then with that also has a covered call overlay, which once again not only protects against downside, but also generates premium for the fund, which is paid in the form of dividends to investors. Now, one of my favorite parts about DIVO is the fact that the holdings are super high quality. We're talking names like Microsoft, Visa, Walmart, United Health Group, the Home Depot. You're getting super high quality names by buying into DIVO. And even though DIVO does pay a nice dividend, it has also grown in ETF price long term. We're talking over 50% in the last 7 or so years, and that's not even including dividends. Now, I guess one of the negatives would be that DIVO does have an expense ratio of 0.55%, which again is sort of industry standard when it comes to these covered call ETFs and hasn't really bothered me too much. Now, DIVO does pay a smaller dividend compared to that of SVOL and of that compared to JEPQ, but it still is relatively high yield, I would say, at 4.58%, which was much higher when DIVO was trading in the 33s and 34s not all that long ago. Now, even though DIVO does not have any dividend growth, or at least has not really had much dividend growth historically, DIVO has consistently paid around 14 or 15 cents every single month for years and years and years now, with even a few special dividends tossed in here and there over time. But DIVO is one of those ETFs that I have in my portfolio, and I really use it as a pillar. And even though it's high yield, it offers a protection because of the holdings, the covered call overlay, and the basically guaranteed income I've been earning every single month since I've held on to DIVO long term. So there we have it. Those are 3 high quality, high yielding ETFs that I am even personally holding throughout my portfolios. Now, even though I personally would never use some of these higher yield names to make up the majority of my portfolio, like I sort of mentioned earlier, it is nice to have some higher yield names in my long-term dividend growth portfolio because with my personal strategy, I like to use as much of that cash flow that comes in monthly to reinvest into other high quality names and grow the snowball as fast as possible. And then of course, later on down the road, use those dividends most likely to retire, pay for bills, or other things. But when it comes to higher yielding ETFs, I want to hear from you guys down below. What is your favorite, number one favorite high yield ETF across the entire market? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.